Hello guys, in this short video I'm going to be explaining how you can identify some candlestick patterns such as engulfing. Engulfing pattern is key when it comes to trading. So in my previous video, if you have not seen below, then on either side of this video you can see a card on support and resistance. Please go back and see in that video how you identify support and resistance. In this video we are going to be covering engulfing candles and how you can combine support and resistance. You can form a chart like this, and then put a support line, a resistance line, and how you can combine that with some of the candlestick patterns such as engulfing, and then identify your entry points and your exit points. So I'm going to be explaining what an engulfing pattern is and how can we identify this. As an example, on this chart that we see in front, I have kept my support and resistance line there, but when I show an example, I will remove them and I will re-add just to make it clearer. So an engulfing candle is normally when a candlestick, so as we see, for example here, this is a very good example. So as we can see, this example here, the candle, this candle, 1 hour candle, price had dropped down below, and the price had ended above this support area. How we form this support area is due to the touches on the left hand side. You can see there's a strong support area. Again, there is another video on support and resistance. Please go back and see that video on this channel and it will cover it up clearly. So as we can see, the next following candle, price rose, and then it ended above the candle prior to it. So what that means is that every candle, a candle which ends up larger than the previous candle, so this candle is ending up higher than the previous candle. So this price has ended up around 40,700. This candle, when this candle was being formed, this ended up around 41,000. So this candle went higher than this, and the top of the wick of this candle, which is this line, is not that long. This candlestick has gone higher than this. This is an engulfing. So this means it's an engulfing. So a candle which is larger than the previous candle means it's a bullish engulfing. Means the price, there is a stronger possibility that the price is going to move higher. Buyers are stronger, and it's a signal for traders to go long on the market. Now, long and short I can explain. Long is basically when you are expecting or you are predicting the price to go higher, and short is when you are predicting the prices to go down. You can trade on a short as well. However, I can explain this in a further down the line in another video, what short and long is. Right now we are just going to buy and sell, so just for basic understanding. So if you were to trade this market, you can see this candlestick here has gone higher than this candle. That's a very good entry point. However, even though the next candle was red, but you can see that this red candle did not go below than the previous candle, which means the trade is still valid and you can be in the trade. So you can see that the price was rising, you can still stay in the trade, you will still be able to stay in the trade. As you can see, the price is strong. And then understanding that you have made your resistance lines on the top, you can see how price has been struggling on a certain level, and you can get out. And you can see, to get out in a trade, you can understand it with the bearish candle. You can see here how this candle here closed lower than this candle, the previous candle. This candlestick, you can wait another, you can probably wait for another candle close, and you can see price struggling on a constant level. This could be a signal for you to get out. And if you were late in the market to get out from the trade, you can see on this candlestick here, this was a very large sell-off, a pretty large sell-off for a 1 hour, and the price had gone below the resistance level. You can either get out here, knowing that the price has actually dropped below quite significantly, and it's engulfed the previous candles. So when a candlestick forms like this or like this is called a bearish engulfing. So again, bullish engulfing, when the price rises above the previous candle and is stronger than the previous candles, that's a bullish engulfing. And the bearish engulfing is the vice versa, where the price is very bearish and the candlestick that's ended, it's actually bigger, it's closed down below, larger than the previous candle. They are bearish engulfing. So they are signals, these are certain signals for traders to get out of the market. Now some of these strategies, again, you are combining this with support and resistance. As you can see, that beauty of support and resistance lines, and how using support resistance, and how a candlestick pattern such as bullish engulfing, bearish engulfing, you can actually trade this market. I would also say you need to practice as much as you can and back test a strategy 50 to 100 trades, and then make a decision if you are taking the position. A trader can be successful with a 30 to 40% win rate, depending on how much you are willing to lose, how much are you risking. So what is your win to loss to win ratio? Is it 1 to 2, 1 to 3? Again, I can explain this in another video, how you can do risk management properly, but this is just to cover up a certain strategy. To go a bit more advanced, you can add in another strategy with using volume. You can trade volume. I can explain that later, what trading volume is and how you can use trading volume to see if there is actually movement in the price, and that actually confirms the trade. However, this video was only just to explain what engulfing candles are. There are other candlestick patterns which I can explain later. If you do like this video, like and subscribe. Comment down below what type of topics you want us to record, and also if you want to see any other candlestick patterns and use them for your trading strategy. Until next time, peace.